All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So a little bit of a pullback here in the markets here. Noticing specifically on Friday, there's a little bit more of a character change here in the market. So they did change the CPI metric again, and surprisingly, it actually revised December CPI up. So markets on Friday, a little bit nervous here, although they did manage to float back up in the afternoon. If we flip over to intraday here, you can see we opened lower, and looks like maybe somebody probably knew about that ahead of time, because on Thursday we had a pretty good fade all day long after a gap up. And now, of course, we're going into the much anticipated CPI number for the month of January. So, and this is a new metric too, and it's very interesting because those of you guys been watching this channel for a long time, you know that typically they try to revise this stuff down. They try to make it look like there's not inflation, but whatever happened, it went up for December. It got revised up. So there's a lot of question marks here going into the CPI. Now, we've talked about this. The market has had a nice, we basically called this short squeeze here. And a lot of these names here have come in pretty sharply over the last week, though I do think there is a chance you could get one more push up. But I mean, take a look at some of the names, Silvergate, Carvana being like the most shorted here as a percent of float. Bed Bath & Beyond, a lot of these names have come in pretty sharply here. Take a look at Silvergate. Big pop there a week or two ago. That did come in this week. Bed Bath & Beyond coming in very sharply. Carvana, Wayfair. So a lot of these names, look at this move here, $40 to 75 and then from 75 down to 52. So starting to see some of this stuff cool off, and really the last week or so, it felt very much like 2021, where you just had like the meme stocks going crazy, and just this crazy, crazy type of short squeezing going on here. And I think there's a possibility we could get one more little push up here off of the CPI number. And the only thing that makes me think that is that we've kind of pulled back a little bit ahead of CPI. And on Friday, specifically, like I said, the market did change character a little bit, and I talked about this in my Friday video. If you take a look at the 2-year here, the 2-year broke down. So that broke down this week, and you guys know I cover this every day and every week. That is a breakdown in the 2-year, and that's telling us that there's the whole narrative, right? Jerome Powell's whole narrative is that disinflation is now, the process has started. Well, this is calling BS on that. This is the bond market here. The bond market's smarter than the stock market, and it's usually ahead of the stock market, and stocks are kind of ignoring it right now. But what I'm saying here is that we did pull back a little bit ahead of the CPI number. So sometimes you can kind of get things to be priced in just a little bit. Irregardless, I should say, we've had such a move up here. I don't know, even if we do get a softer print, I don't know what's left for the market to rally on. So, I mean, we could get a gap up. I wouldn't doubt that. But we kind of similar pattern here to December. So we had that big pump bar. That was where Jerome Powell had a press conference. We had a huge pump, and I noticed specifically the financials via the XLF here closed below that big green bar. And then we had that big pump up on the FOMC. And if we look at the spiders, they didn't quite close below that green bar on that day that the financials did. So the financials were kind of a leading indicator here, as were the transports. The transports lost that bar as well. Well, this was your Powell pump here, and the transports broke below that. And then you have the XLF. Excuse me, that was actually the after the FOMC, but Powell was speaking on this day here. So I correct that. So but either way, it broke below both of those bars. And then again, the XLF, here was that Powell pump, and we, negated that whole rally. It didn't quite close below it. They did save it just a little bit here, but XLF showing a little bit of laggardship and kind of fading that whole pump. In addition, on Friday, take a look at XLE, up 4%, XOP, 5%, OIH, over 3.5%, crude futures, 2.25%, even nat gas finally getting a pop here, up 6%. So it was very reminiscent. Friday's trading action was very reminiscent of, really, and Thursday and Friday, really, was very reminiscent of the type of intraday action we were seeing in like April to June. Energy up, bonds are getting smoked. Take a look at ZB here, the 30-year got smoked the last 2 days. Dollar index continuing to rally, and a nice little move off the lows there and putting in a bull flag now. Told you guys I love this reversal last week, and we flagged all week this week. So dollar index is setting up here. But either way, it feels like the inflation trade is back on. And, again, financials, speaking of financials, let's look at Credit Suisse. So I know Jason's talked about this multiple times on here. They're going to have to do a reverse split at some point unless they can get their stock above $5, because just the rules, all these funds are going to have to dump it based on, the FINRA rules of, equities sub $5. They probably got another currency swap here. So there was mass outflows here on, there's an article on Zero Hedge about that. Massive outflows, basically a run on CS here. And it did get a bid on Friday, and it just gapped up 4% like it was nothing. I think they probably got another currency swap, most likely. But this is, threatening new all-time lows here. So financials in a lot of trouble. And I noticed this on Thursday as well. That was one of the first things to go here, Citigroup. It was trading down with the rest of the market here, but then towards the last hour, just a big dump there. Wells Fargo, same thing. Bank of America, JP Morgan, Goldman, pretty much across the board, they were all getting hit pretty hard. So again, financials kind of telling a story here. But as far as the charts are concerned, spiders, they're holding up here. Technically, you have on the daily time frame, you do have, up move and then a little pullback, holding the 20 moving average. Again, that's why I think they can probably pop this one more time. And if you remember back in December, before I got sidetracked here, I was kind of going to say here, so we had that failure of that green bar, and then we had a pump anyway, and it just resulted in basically a nominal high. So I could definitely see something of that nature happening, but to me, it does not look like, it's especially the bond market, it does not look like the bond market is saying that there's disinflation. If you want a better visual of it, you can take a look at the 2-year yield here. That's just basically the opposite of that chart, but 4.41, almost 4.42 now, and one up move, 1, 2, 3 pop. So 2 years saying that the inflation trade isn't over, and energy definitely looking like that on Friday. Now again, could this reverse? It's only been a day or two, and it's only been a week. It's possible. But right now that is setting up here, and I think the bear thesis really for all of really the last 6 months has been that the Fed's going to push us into recession, and then they're not going to be able to get us out because inflation is too high. I think that we're not even going to get to that point yet. I think that the next shoe to drop is inflation could come in hotter than expected. So everybody's expecting disinflation and then a lack of Fed bailout. I think there's a real possibility that we just have too much inflation. The inflation comes hot on Tuesday, but we'll see what we get. Either way, again, I can't rule out one more kind of pop here. I would call it probably a blow-off move. Again, very similar to December. It might last, the next week or so. But this market is extremely long in the tooth. Again, take a look at stocks like Tesla. People beat me up for saying this a month ago, that Tesla was going to squeeze. And this is up over 100% now in the last month. This is a bear market move. This is not what happens in bull markets. It's a rip your face off rally. NVIDIA up 100% here, right into that 50% fib from the all-time high. A really good level there, by the way. They have earnings coming up soon. But in any case, let's take a look here. Move on to the triple Qs. Same thing here. So again, up move and just kind of fading. Again, the NASDAQ was on the weaker side on Friday. The semiconductors, which we always follow, were down. We're kind of leading to the downside, as was cloud software and really the rest of the triple Qs. Google took a pretty big hit here. They had their new AI program, gave a wrong answer, so that got dumped pretty good. Amazon also completely faded that FOMC pump. So there's two kind of big tech names that have already faded pretty sharply off the highs there. But overall, tech's starting to behave like the inflation trade is not over yet. Although technically speaking, from a technical standpoint, there's nothing wrong here. You're above the moving averages. You're into this green bar. You held this trend line back test, so it's hanging in there okay. Again, I can't rule out one more kind of like knee-jerk pop here, but this rally is starting to get long in the tooth here, and I don't think there's much time on the clock left. Another signal here, the rally starting to dissipate, is the Russell. So the Russell 2000 again, so risk index, small caps. This had a pretty sharp decline, and this has been underperforming the last week or so. And I've went on record this week and said I think the Russell is probably topped here. Even if we do get another bid, I don't think it will result in a new high. Maybe it could result in a nominal high, but this has fallen pretty sharply here. It is into some support, so around that 188 area. If we flip back here, you can see that goes back to that previous pivot to basically a year ago, over a year ago now. And it's been a good pivot point for the IWM. So it should get a bid here, but I'm not expecting higher highs right now. So Russell 2000, again, leading to the downside. Dow actually held up the best on Friday, and that's generally a risk-off kind of indicator. Again, the target here is still 345 if we do bid up on the DIA. All right, so we already kind of went over the semis, but again, we'll do it again here. Again, nothing wrong with the pattern. Still looks okay. I think a lot of the semis, though, has been NVIDIA lately. Again, just a straight short squeeze up here. But if you look at some of the other semis like Micron, TSM's been holding up okay, I suppose. Intel, AMAT, you know, some of these are... Basically what I'm saying is the SMH has really been carried by NVIDIA the last week or so, really the last month or so, I should say. But again, it's holding up okay. We won't take anything away from it. A close below this green bar would be a failure, so that would take it back to 230 and possibly 220 pretty quickly. But for right now, it's holding up okay. I can't see anything wrong with the pattern. IGV, same thing. Nothing terrible here. You're actually still holding that green bar from earlier this week. We finished with a doji, so this could still get a bid here. I can't rule that out. And again, it's all going to really come down to that CPI number, and I think it's tech right now is definitely really weighted on that. So again, if that 2-year continues to push lower, that's really just going to poke a massive hole in the bull case. But for now, everything is holding up. Anyways, over to the transports. So we did, again, we broke that green bar low. It's hanging in there okay. We didn't test the 20 yet. Pretty good sell on Thursday, though. That's some pretty good, you know, damage here in the short term. I would think support in the near term is going to be 14.7 to 14.8. That's your pivot high, pivot high. The 20 MA is kind of in that vicinity as well. So a pullback to that area would be short-term support. And a bid, you know, resistance is still the same. So right in this area here, there was a lot of supply trapped in there, and that is shown there in the charts over the last week with that sell-off. All right. Briefly, again, interest rates here, 2-year, that's a breakdown, a clear breakdown. Even Jerome Powell's speech couldn't save this earlier this week. So the bond market is calling BS on the stock market. Do not ignore bonds. That's all I'm going to say about that. 10-year also coming in as well, basically into this green bar. So it could get a bid here. That should be some support here in the short term. But again, you can see the same, basically the same trend line here on the 10-year. You know, so there's your breakdown. So bonds here are in trouble. ZB 30-year. Broke below that green bar low and has not looked back here. Again, into some short-term support, so it could get a bid off this area. Maybe the CPI comes in, you know, cooler than expected because we're into support. We get a bid, and then possibly a lower high. We'll see what we get. But either way, this is a breakdown for bonds. No other way around it. All right. XHB home builders again pulling back off the highs. I don't see new highs in these names either. XHB or ITB. They're still holding up well, but I think the last week or so was a blow-off move here. But again, still looking like everything else. If the market rallies, this will get a pop as well. So don't discount that at all. VNQ, real estate here. Again, nice outside move and really faded pretty sharply off those highs there. Again, into some near-term support. Here's your pivot high, pivot, and then there's your breakout area. So again, could get a bid off of that, can't rule it out. But again, I think that outside move there will probably mark a top in this. Maybe it can make a nominal high, but I'm not expecting it. XLF, we already touched on. Again, this is starting to put in a rising wedge here. Let's extend these trend lines out, which is a bearish reversal pattern. So again, the more this tightens up, the closer this gets to breaking. Now, a lot of the time with the rising wedge, sometimes you get an outside move up. So you'll get kind of one of these like fake outs, and then it'll come back down. Case in point, I think I actually mentioned this on here a week ago, or it might have been 2 weeks ago, but IWM, I mean, this is a great rising wedge. I actually called this on my channel. I said, look, we have a rising wedge here. A lot of the time you'll pump up through it and it'll be a fake out, and then it'll break back down. And that's exactly what's happened. So I could see a similar setup there on XLF. And then you got that red bar up there. So, I mean, 38 bucks could be an area. You have consolidated a little bit over the last 2 weeks. So maybe it can, maybe it has a little bit enough, a little bit more juice to get up there. But just keep in mind that is a bearish wedge there. Anyways, over to the XBD here. It's holding up well. I can't say anything bad about it. The more volatility this market gives us, the more these dealers can make money off of that. So that's really my explanation for the relative strength here in XBD, but they have been really strong throughout this bear market. All right, over to energy. So here's, I want to talk about crude a little bit. Crude did get a bid pretty much all week. It was only red on Thursday, and it really was just an inside day. Still has a bear wedge, still has a bearish inside bar on the weekly. So until that gets closed above on a weekly basis, I'm still giving it a bear bias. If that gets taken out, I think two things. So we have the CPI number, right? We talked about the possibility of that coming in hot. And crude got a bid this week, so maybe somebody kind of knows something here, because if crude's up, or if inflation's going back up and we have a second peak. Remember in the 70s, there was like 3 waves of inflation. We could be about to hit wave 2 here. That's certainly a possibility. But obviously crude up, inflation up, that's the inflation trade, right? So if that were to break out, it would be kind of confirming that case, and it does look like it got a bid here. And for what it's worth, you had a little bit of an uptick in volume there. So again, I can't declare anything until we get above that red bar. If we do start to break down, I don't like the 200 moving average. I like the $60 area a little bit more, just because we've consolidated enough above that 200. But either way, crude's definitely an interesting trade this week. We'll see what it does moving forward. XLE, same thing. That outside move on Friday, that to me, I'd like to say it was we're talking about the inflation trade. It could be a head fake here, but that's 4%. That's a big move. That's not small. So I don't know. Is it a head fake? It's possible, but that's a pretty big move there. And then the XOP we already mentioned, same thing. Little uptick in volume there as well. And OIH also holding up as well. It says a nice pattern on the monthly. This should get up to 350 from what I've kind of done, from the work I've done on it. Eventually, I think it does correct down to 250 regardless. But either way, it's holding up well. I can't say anything wrong about it. Okay, now Nat Gas. Everybody wants to know about Natty, of course. So this has been such a wild trade here. I'm starting to see evidence here that the liquidations are done. So basically what's happening here, assets don't go from 7 to 250, especially something like Nat Gas that's like an actual asset. We're not talking about just some like random crap company here. This is Nat Gas. Without there being liquidations. So this is not really fundamentally driven. It's more funds were over leveraged gambling on futures at $9, and now that it's fallen, they're getting liquidated. So forced selling is another way of putting it. And if you look over the last couple of days into the COMEX close, you've seen these sell-offs here. So into the COMEX right ahead, and then after hours, it starts to bid back up. So that tells you that there's somebody liquidating before the close. They're using the bids to liquidate because they have to. But it's now Nat Gas has not made a new low this week, and it actually had an outside week with heavy volume. So, or I should say not an outside week, but it had a green week with heavy volume. So maybe it can finally get some, maybe the rubber's about to hit the road here. But I think once this gets going, it's basically you have artificial sell liquidity. It's forced selling. Once this gets going, this is going to get to 350 very quickly. So, and it's very much like the Tesla trade, where it's just over. Lots of shorts piling in, lots of forced selling. There was rumors that Elon Musk was selling, even though he wasn't. He was outside of the sell window. Either way, piled in trade, and then you kind of got one more little dip, and then literally a 110, 120% rally in 1 month. Nat gas can easily do that. It's, in fact, this right here is a 50% rally, and this right here was almost a 100% rally in a month, and that was without nat gas as oversold as it is. So interesting stuff here on Natty. Anyways, let's get back over to the dollar. We already covered that. Beautiful 1-2 pop up here inside bar. So I still like the dollar for a move up. It might want to test 102.25 again on a knee-jerk reaction of the CPI, but I do like the pattern here. Dollar looks good. Gold a little bit on the weaker side. Down move, a little inside bar. So this, I think, is in backing and filling mode at the time. It might get a little bit of bid here if bonds hold up. Like, again, we talked about the 30-year being into support. Again, if that gets a bid, it'll probably be a tailwind for gold. So we'll watch that. But I would expect 1920 to 1925 to be resistance on gold here. And the near term, then silver, bottom falling out of that. Last week, as we talked about, and this has kind of just drifted lower into that 100 MA. Again, this could bid up to 23, maybe 23, 25 in the near term, but I think this is also in correction mode as well. I will be a buyer of this probably in the not too distant future. We'll have to see how this plays out, though. We called basically the lows here last year. I told everybody buy physical down here, and that's been a good trade so far. But I do think it is in backing and filling mode right now. Platinum, same thing. Probably gets a bid off that 200 moving average. I think it's right into I want to say it's into a 50% fib. Yep, so pretty much right there, just piercing through that. If it gets lower, obviously your bigger level will be right down at 920 at the 618. But for right now, I think it can probably get a near-term bounce here, maybe up to 1,000 there. On PL futures, copper, also backing off like everything else. We talked about that $4 handle. It got down basically to that area on Monday and a little bit of a bounce. I still think it wants 390 here in the near term, but you know, it's hanging in there on the daily, but you do have a little bit of an inside bar bear flag for now. All right. Lastly, over to Bitcoin. So this did back off a little bit here, and you kind of lost this bullish structure. So you had like this kind of like bull flag pattern. I talked about this over the last week. It does kind of look like a rounding top. I would prefer it if it was a straight like right angle, but I don't like those higher highs, and now you have lower highs. So we did break that down on Thursday, and near term it should have support at 21.5, but I think it wants to go to 21,000. Then you have the 50 MA below that, but you don't want to see a close below that green bar. So 20,876, a close below that takes you right down to 18.4. So I mean, you'll have a speed bump at 20,000. There's a 200 MA, but this is going to go much lower if you lose that breakout bar. So Bitcoin in a little bit of trouble here, and it's lost kind of that bullish structure there. Again, could this still recover and pump on the CPI? It's absolutely possible, but just be aware that that bullish structure is now much, much weaker. Okay, anyways, let's get back over to the spiders here. So to wrap it up, yeah, again, a lot of this kind of like meme euphoria here is starting to back off here. A lot of the meme stocks starting to come in. And it does look like there is a possibility that the inflation trade is back on here. Could that be a short-term head fake? That's certainly possible. Could I see us going up here and filling this gap at 422? Absolutely. There's technically nothing wrong here with the spider's pattern on the daily or the weekly. But ultimately, I'm in the camp. This is just a big 5-wave down and then an ABC up. So I think the rally is getting long in the tooth, and we're about to get to the point where we get a rollover here. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.